Hello everyone, welcome to Blue Dragon Actual. So today the topic is very interesting. These are what are the insurance product then that an actuary would buy. In fact, interacting with several freshers and you know people who are just beginning their actual career, I understood that they do not understand being an aspiring actuary themselves. They do not understand what insurance product they would own. In fact, that is also a case with multiple people who are quite experienced and they themselves do not own any life insurance or any for that matter any insurance product. Also, I get this question from many of my friends because I am in insurance industry for a long time. They ask me that what is the insurance product that I should buy, right? Should I buy that policy is offering 4%, 10%, 18%, some provide guaranteed return, etc., etc. Should I buy that policy? So today you are going to get the answer for all of those questions, right? And I believe that as an actuary, as an aspiring actuary, or maybe as an experienced actuary, you should have some insurance product in your portfolio. And the view that I'll represent here would be my personal opinion, personal view. It does not represent the company that I work in. And also, I mean, you should also have your own view, and you should understand why I am saying that this product you should own and why some product you should not own or may not be that relevant for you. Okay. So without many wastage of time and just trying to keep the video small, let's start. So what is the purpose of insurance? The basic purpose of insurance is protection, right? Like in this animation you can see, this is a Japanese animation called Inuyasha, where there is a very famous scene where that person, he is the main protagonist of this animation, and he say like he mentioned this to a girl that just shut up and let me protect you. So that's exactly the power of insurance. Insurance is like a superhero. It protects you from evil or from villains in life that you do not know that they are targeting you. So that is the basic purpose. That's why it is called insurance. The purpose of insurance is not saving. That might be the purpose of something else, maybe stock market, maybe mutual fund. Their purpose is saving, return, investment, etc. But for insurance, the main purpose is protection, right? However, as Indians, we purchase insurance to save our tax, and usually insurance product are sold the most during December, and that is the reason because at that point of time there will be tax documents that will be collected by the HRs, right? And they would the salary would depend on the salary that you'll take home for the next 3 months will depend on the investment. And we have ATC investment regime in which you can save up to 1.5 lakhs. That 1.5 lakh would not be chargeable if you are investing in certain sources, insurance being one of them, right? And that's why people buy insurance product, unfortunately, in India. That's why the penetration when I started working in 2012, it was around 3%, 3.5%, and right now the penetration is 4%. Everyone, all senior people in Institute of Actuaries, and the in insurance, Indian insurance industry, all of them combined together has only been able to increase the potential to 0.5% or 1% maybe. Uh, it's just and that's the main reason behind that is Indian mentality. The Indian mentality is just to save more money. It's like that ad where in Maruti ad, I think they ask kitna deti hai. It's always about mileage, right? It's not about something else. So people see insurance product as a saving product, but it is not a saving product. The main purpose of insurance, as I mentioned in the previous slides, is protection. It is not for your tax saving. Should not be bought for anything related to saving, whether it is tax, whether it is return. It is the main purpose of insurance should be protection. And that's why you should purchase a insurance policy. However, unfortunately, people purchase the insurance policy just to save their tax, and that should not be the correct purpose. In fact, that's why there are many people who may sell the policy because the objective of people is different. And also at the time when the proper need for insurance product arises, when the insurance company need to pay the claim because they have purchased a wrong product, or because they purchased a product from a wrong company, they would have difficulty in getting the claims paid, right? So what you actually should see while purchasing an insurance product is not the premium, how low the premium is, but how good the claim settlement ratio of that company is. So if the claim settlement ratio is say 99%, then you should go for that company, even if the premium is high. Because because at this services will be provided when probably for life insurance when you will not be there, right? And if the claim settlement ratio is bad, then that company is finding faults in your proposal form just to not pay the claims. And if the claim settlement ratio is good, then that company is settling your claims, right? Obviously, you can file case with insurance ombudsman. There are other channels, etc., to get your claim if you are right, but those would be unnecessary hassles. So people usually see the premium and buy the policy, but it's like a cost, cost, and the people fight for the cost. Like companies also fight for the premium efficiency and the lower level of premium. But what they actually should advertise would be the claim payment ratio. But unfortunately, those are the things that common people don't understand. Common people purchase product, life insurance product, or they are missold life insurance product as saving product, saying that this will give you 20% return, this will give you 18% return, etc. Or they purchase the product for saving tax, which should not be the case. They should purchase the product for protection and not for saving, whether it is for in terms of return or whether it is in terms of tax. Moving on, also this financial year, our finance minister has kind of made the new tax regime default tax regime. So there is an intent that shows that the old tax regime where the deductions like ATC, ATD, etc., all these deductions is going to go away, right? And new tax regime would become the kind of the final and the only tax regime, right? So, and that would happen if this government is elected to power in the next election as well. So the impact of that can be seen in the price, right? Because and this impact should not be there, right? This impact should not be there. This price movement, you can see this. This is the HDFC Life, which I believe is the number one or number two player in the Indian market. I believe it is the number one player. I'm not sure about the recent stat, but I believe it is the number one player. And look at this fall. And this has happened on the 1st of February when the new tax regime was made the default tax regime. Reason being, in new tax regime, there is no deduction that is allowed. Like ATC, ATD, all those would be removed. And if this became the only tax regime, then people will not purchase the insurance product, right? Because they would not get the benefit. And that's why there is a massive fall in the stock market. And this, I'm just showing you one one life insurer. It happened for all the life insurers, because unfortunately once again people in India purchase insurance product for tax saving, whether and they should actually purchase for protection, but they actually purchase it for tax saving. That's an unfortunate truth. So why you should purchase insurance product? You should purchase it only for protection. You should not purchase this once again for saving, whether it is in form of return or whether it is in form of tax saving, right? So what would be the insurance product that I would own, right? Or I already own? That would be a life insurance product. And in life insurance product, I will only go for term insurance, because the premium for this product is the lowest, is the cheapest. Like they advertise, in 500 rupees every month, you can get 1 crore, right? 1 crore of sum assured. So that's why, and this is purchased for the purpose of protection, right? So I know that I need protection if I die, someone who is my dependent, that person should get that 1 crore rupee, right? Because I am not there, I cannot take care of them. So that person should get the 1 crore rupees, and or whatever the sum assured is. And that is the reason I should purchase a term assurance policy, right? So that's the first life insurance or the first insurance product that you should have in your portfolio. Moving on, another life insurance product that you should have would be the child plan. If you are a parent, if you are married, and that's once again in this case you are the proposer. However, uh, you are the life assured, but the child will be the proposer. So in case you die, right, the child is going to get the money, right? So you are not there for your child, then the child would get some amount, so that his or her education would not be compromised. Also, if you survive the time period, then you will get some lump sum that you can convert into annuity as well. So these options are there. And that's why you should purchase one child plan. Now one can ask that this is also a type of saving product, and you are saying that you should not kind of involve protein. You should keep insurance and saving products separately. So yeah, that's true. If you can manage a fund, right? If you can manage a fund, or if you can have your own stock investment or something which will give you that corpus, so that you can get maybe some amount when your child turns 18 for his or her future education, then you can do that. But I think most of the people would not like to take that risk, that for my child at least I would like to have some certainty that this amount would be there, and remaining amount if I can accumulate through other fund, then that can be there. Although I'm not a parent, I'm not married, but I think this is one of the things that you should have in your portfolio, right? Moving on. So, do you need ULIPs or other saving product like endowment or whole life? So, you would not need those product if you are a stock market wizard. Like you can see, this wizard is kind of minting money from fresh air. So, if you are that good, if you are that qualified, you don't need it, right? In fact, you can probably invest in mutual fund, and you will get much higher return. ULIP is something that is devised or based on mutual fund, and I will also release a video between mutual, like comparing mutual fund and ULIP, tax advantages and what is the reason, next Friday, right? And that would also bring me to an announcement that I'm wanting to make, like from next week we'll have a video every Friday instead of weekend, and that would be the only. So every week we'll have single video. That's because I understand my videos are a bit longer, right? And also it require a lot of concentration to understand the concept, right? So I don't want to release too many videos. So that's why I would release only one video a week, and that would be released on Friday. So people have ample time from Friday, Saturday, Sunday, they can watch the video, even if it is slightly longer, because my videos, when you are explaining a concept, it has to be longer, right? So that's why it has to be longer. And so coming back to the topic, so do you need ULIP for other saving product? No, you don't need that if you have that expertise. And I think you should not probably invest in this. You can probably invest in mutual fund, recurring deposit, fixed deposit, etc., right? Which will be more uh, kind of like, which are oriented for saving purpose, which are created for saving purpose. Maybe ALSS, right? That would also provide you some tax benefit. So you need to figure out those investment vehicles rather than investing on ULIP, where a certain amount of charge will also be deducted for the mortality part, right? And I mean the benefit that you'll get would not be a real benefit, like it would be eroded by inflation. So I would personally not do that, right? Also because of the fact that I understand stock market quite well. However, if you have no understanding, if you do not want to take that risk, if you want to just have some amount at certain point of time, if you do not have that investment expertise, or you do not trust the mutual fund, etc., you expect the Indian market to go down, then I think fixed income uh, insurance product like maybe a money back guarantee or endowment, right, that might be beneficial, or ULIP for that matter. But if you expect the Indian market to go down, ULIP would not help you. Same way mutual fund cannot help you. ULIP, which is devised on the concept of mutual fund, will also not help you. So that's why you should not do that, right? So that's what I wanted to highlight, that if you have the investment expertise, then you should use that investment expertise to generate saving for you. Then you should not purchase an insurance product which also gives you additional saving or additional return. That you should only purchase the insurance product for protection. But if you do not have that investment expertise, or you do not have the time, you do not want to take any risk, then you should go for fixed income, or fixed fixed sort of return like endowment, money back, etc. Then you know that by the end, if I survive this period, then I'll get this benefit. Even if I don't survive this period, I'll get that benefit. But you will end up paying lot more higher amount of money, like you will be paying premium a lot, which will be lot higher. If with same amount of premium, if you just invest in maybe Nifty or Bank Nifty, you will get much higher return at the end of that time period, especially for Indian market, because Indian market has already always been on the rising, rising side. Indian market is always bullish, right? So if you just invest on those simple, ETFs, Nifty Bs or Bank Nifty Bs, these are exchange traded funds. If you just invest same amount every year on those, it would grow to be a much higher investment, or would provide you much higher investment return as compared to ULIP or other same product, which has so many charges that are going to get deducted, right? So I hope this portion is clear. Moving on, health insurance policy, one of the very less aware product in India is critical insurance policies. These usually cover three or four critical illness, heart attack, stroke, cancer, etc. So these are the policies. So you need to check for policies, and you need to purchase health insurance policies, and that would be as per your the health history of your parents. If your parents have, like, maybe your grandmother or grandfather has died of cancer, then you know that cancer is a critical illness. That might happen to you because your genetics might be weaker to this disease, and you might need to go for a critical illness for that. Sometimes critical illness, or most of the time critical illness, is sold as a rider for the term policy. That will accelerate the benefit. Like, if you die, if you have the critical illness kind of diagnosed in that product, then the benefit that you'll get on death for being a holder of term policy, that will be accelerated quicker. Like, you will get that benefit when you are diagnosed with that product, or diagnosed with that illness. So usually people purchase critical illness rider along with the term policy, and it's a very good idea to do so. So both sort of protection would be present there. Term assurance would provide you protection against the mortality risk, and health insurance or critical illness will provide you the protection against the morbidity risk, right? So this is one of the must have, and this is very low awareness is there in the Indian society, because most people do not understand what this is. And critical illness is actually a product which is very similar to term insurance product. In fact, it is kind of designed on that, but critical illness would probably be more complex as compared to term insurance product. So this is also one of the portfolio that you need to have. Right now I don't have this product in my portfolio, but I intend to have one very soon. Moving on, another health insurance policy that you should have is Mediclaim. Now, Mediclaim is also provided by your employer if you're working. So a portion would be provided, and you can take additional Mediclaim, which will be over and above this Mediclaim. So these days, the medical expenses are so high that if you just stay in hospital for 5 6 days, it will be 5 lakhs, 6 lakhs, 7 lakhs, especially in a good hospital. Because in government hospital, the hygiene and the doctors there may not be like, there might be questions about the processes and the ways those institutes are run. So you would obviously prefer a private hospital, and there the charges are very high. So you need a Mediclaim. Now, suppose sometimes your company's Mediclaim may not be enough. They might provide only 2 lakhs Mediclaim, but you end up having a claim of 10 lakhs. Now, who would provide that claim, right? You may not have that liquidity, or you may need some time. You might have to take a loan to pay the bill. Like, we have seen that Dhoni ad where he was asked, like, loan chahiye abhi chahiye isi time chahiye, something like that. So for that you need health insurance policies. So I have a very good health insurance policy, and I don't want to take the name of any company. This is not a promotional video for any company, but I am protected till 10 lakhs, and which is over and above my my the insurance protection that is provided by my company. And many times, my actually the problem with the Indian parents especially is that you are paying the premium but you are not getting any benefit. Same question they ask for term policy. Once again, you should not look at benefit. This is for protection. If something happens to you, then this benefit would come into picture. If something, you would not like to take that benefit at all, right? That's the basic purpose of taking insurance. You would not feel like, when can I exercise my benefit? You are not a holder of term policy so that you can exercise the benefit, right? Then that means that you have to die to exercise that benefit. Similarly, for Mediclaim, you have to get sick to exercise that benefit. So problem is, our Indian parents do not understand that you need a Mediclaim just to be safe when you are getting admitted to the hospital, or for many visit to the hospital, some problem that would be covered by the Mediclaim. But once again, you need to see and go through the terms and condition. That is also one thing that I've seen people do not do. Like, they do not go through the terms and condition of insurance policies, and they just purchase because their friend suggested, and at the end they learn that these are, because of this terms and condition, there is an exclusion clause, and that is not covered under that Mediclaim policy. So you need to see the terms and conditions very properly before you purchase a Mediclaim policy. What are covered, what are not covered, whether just a clinical visit would be paid by Mediclaim, or you have to be admitted for 24 hours in a hospital to encash a mediclaim, what are the diseases that are covered, whether AIDS is covered, for example, if a person have AIDS, right? So all this has to be kind of verified, and you need to be smart and intelligent. You cannot just purchase a policy depending on what your advisor is suggesting, because that person is not actually what you are. And same, and need to be, uh, same focus or same sort of cautions need to be displayed while maybe purchasing the policy. And once again, you need to look at the claim settlement ratio, not at the premium, like how cheap the premium is. That should not be your consideration. Once again, many people purchase mediclaim policy because of 80D deduction, right? Once again, in the new tax regime, those deduction would not be present, and that does not mean that you should not purchase this policy. That would be very, what can I say, stupid of you to do so. You always need these policies, because these are things that can happen anytime, and when that happens, that will dent your saving account. So for you not to have that dent in the saving account, you should have this policy, right? And there are many medical policies which, like, there are few medical policies which reimburses, right? Like, you first have to pay, and then the medical policy will reimburse you. And there are few policies which will automatically, like, before you get paid, just if there is a connection or an arrangement with the hospital, then the medical policy would kind of pay. So you need to see what type of policy suits you, right? Obviously, where there is an arrangement, so you know that these are the hospital chains that are covered, and I should get admitted in this sort of hospitals. And if I get admitted in this sort of hospital, then I don't have to even worry about the claim. If my claim is within 10 lakhs, then the mediclaim, the company is going to pay for that, right? The insurance company and my own company is going to pay for that, but I don't have to worry about that, right? So that's how you should focus on this, and that should be your governing criteria for choosing a mediclaim policy. Terms and condition for mediclaim is very, very important. In fact, for all health policies, terms and condition are very important, because there can be exclusion clause, which would not be the case for life policies. And that's why health policies are more complicated than life policies, although they are based on similar concept. But health policies are more complicated because of the terms and conditions. There might be few terms and conditions which are excluded in one company, but which are not excluded in another company, right? So that's why the terms and condition is very, very important. Moving on, general insurance policy. First is the motor insurance. You know that you cannot drive a vehicle without this motor insurance, otherwise police will kind of take out a challan for that. So this is very, very important, and it protects you against your loss of vehicle if your vehicle is under fire for some reason, right? So that is or theft happens. So for that, motor insurance is required, and it is mandatory. You need to have motor insurance if you are driving a car or driving a bike. Another one, which is usually once again taken as rider, maybe sometime with the term product or maybe with the health product, is general insurance policy, which is the personal accident insurance policies. If you are kind of driving your own vehicle, you need this sort of rider, like total disability or permanent disability or temporary disability. This sort of riders would be very beneficial with term policies, because accident can happen anytime. Sometimes it may not even be your mistake, someone else mistake, but you would be hurt for that, and you need this policy. Once again, this is a protection based plan, right? And you need to have this. If you are not, and this plans are very cheap, very you can very easily purchase these plans, and especially these are sold as riders for term policy, and you should have that policy in your portfolio. And I personally have that. So till now, other than that, critical illness, I have every policy in my portfolio. Finally, general insurance policy for the home insurance. So if you own a home, if you are owner of a home, then there might be any contingent event that might take away your life's saving. For example, there might be fire, there might be an earthquake destroying the entire home. There might be so many things, right? So that's why you require a home insurance. Once again, there is very less awareness, and also there is very less company who actually can handle this sort of liability. But home insurance is sold in India, and if you are a owner of home, which till now I am not owner of any home. But if you are, then you should purchase this policy. The moment I purchase my own house, if I do, right, because there is a debate between whether you should live on a rented property or you should be owner of house. Personally, I believe that you should be owner of a house. If you are staying in that house, you should not purchase a house for investment purpose. That would just block your money, and that will be very, very liquid, You should actually invest those money in stock market if you have the expertise. But if you want to stay in a place, if you are certain that yeah, this is the place I'm going to settle down, then you should purchase a property in that place. And once you do, you should have an home insurance so that you are protected. And once again, your parents might ask you that you are only paying the premium, you are not getting any benefit. That is what the insurance is supposed to do. You are supposed to pay the premium and not supposed to here you should hope that you are never have to exercise the insurance policy. If you have to exercise the insurance policy, then there is much deeper pain that you would be in, right? So paying the premium is just much better as compared to that pain that you have to kind of go through when something bad of that sort happens, right? So I think as per me, these are the policies that you should have in your portfolio. And I own all these policies, and I do not have a single saving policy, and neither I'm going to get one, because whatever ULIP return can be generated, or whatever return is will be generated by with profit policy, I can generate 200 times better return than that. And I'm not joking, I can actually do that. So I don't require that, right? But if you are not financially or savvy, or you do not understand the stock market, then you might go for that, right? But once again, you should explore those investment vehicles which are specially built for this purpose, like mutual fund, ELSS, maybe a fixed deposit or recurring deposit. So you should explore those first, and then you should consider the insurance policy. Once again, I'd like to repeat, insurance is for protection. It is not for saving or for giving you return. Those are just additional benefit that we offer with the insurance product. But if we do that, then obviously we are increasing the premium. You need to understand what is the opportunity cost there, whether the premium that you are paying for a endowment policy, if you invest the same premium in a, as I mentioned, in Nifty Bs or Bank Nifty Bs, which are ETFs trading on the stock exchange, and maybe after 10 years, 15 years, what would be the return that you can expect? And if you are getting the same sort of return, if you are not, then I don't think that that would be a prudent investment on your part. So I hope that you have enjoyed this video. This is a very small video, but very, very pertinent and important video, because I have seen many people who do not, who are quite experienced, who have cleared many papers, who do not have the slightest idea of what they should do in this regard. So I think this should help them. And also you can share this video with your friends and family, because this is a very, very important video, and people get missold policies because they lack the understanding. And you should not purchase insurance for tax saving at all. Insurance has a special purpose, and it's unfortunate that maybe bodies like IRDA or IAI do not have a awareness program for this. But also they cannot do that because they also sell the other product, right? Saving product and other product. So they cannot say that purchase term policy only, right? Because then their saving product would not be sold in the market. That's, and they also need a diversification in their portfolio. So from an insurance perspective, that is better to sell a protection product as well as to sell a saving product. That would give them the diversification. But from a policyholder perspective, it is not that sensible, right? So I hope why I'm saying that is very, very clear to you. In case it is not clear, you can write in the comment section. I will try to reply on that. So thanks for watching this video. Please share this video with your friend. If you're seeing this video for the first time, this is the type of videos, conceptual videos we share in channel. And as I mentioned, every Friday there will be a new video from this point onwards. Thanks for watching, and see you in future videos.